Welcome to installment number 5 in the Stock Trading Ninja series. I'm Frank Bunn, your instructor. Now we are getting to the really good stuff, system entries. We can begin to see how we're going to use all of the tools we've been given and lay a strong foundation for setting up trades and controlling risk in the next video. So let's jump right in. And the first thing we want to be certain of is that the universal trigger or the swing high-low pattern is the primary building block we're going to be using to determine entries, and that the specific price action which evolves after the evolution of the universal trigger is what we want to be watching to determine entries. What we're doing here is establishing a structure within the trend flow objective, which will allow us to control subjectivity and get consistent. So we're trading apples and apples, not apples and oranges. The objective here is the development of trading system mechanics, which will result in a specific procedure we can exploit over and over again to pull all kinds of profit out of the markets. Let's begin by establishing some ground rules for the specific reaction phases out of which we want to trade. In my coaching courses, I teach tape reading and how to determine price action and read trends within the broader trend flow objective framework. And that type of intensity is beyond the scope of the Stock Trading Ninja course. But I'm definitely going to cover everything you need to know to be your own Stock Trading Ninja. The key is that the price action following the swing high-low patterns must be corrective and suggest a continuation in the direction of the original impulse. We have to be cautious, however, because an excessive reaction may very well be a reversal. So our objective here is to trade the pullback, not the reversal, and develop a clear definition for continuation price patterns. We'll start with the price pullback golden rule, which states that a reaction in an expected long position should have no more than 2 lower lows in it, and that a reaction in an expected short position should have no more than 2 higher highs in it. Let's look at the simulated chart graphics below to get an idea about the rule. In example A, we see a reaction with 2 lower lows following the assumed swing high pattern at point A. Remember the green, red, and blue trend flow objective. We want to be anticipating expected continuations. However, we don't want to see more than 2 lower lows in the reaction because we don't want a trend change, only a productive consolidation where the greatest likelihood of what will happen next is a continuation. Okay, let's look at the inverse in example B, where we can see the assumed swing low pattern at point B is followed by 2 higher highs. Remember, we don't want to see more than that, and if we do, we need to assume that we're dealing with a reversal and not a continuation. Let's look at some examples. Here we see a universal trigger at point A on a 6 and 18 moving average system crossover. Notice how at points B and C we have 2 consecutive lower lows. This is constructive. We don't want to see a greater reaction than that. In this next example, with the swing low pattern in the same 6 and 18 moving average system in Amazon, here we only have a 1-bar reaction at point B followed by an inside interval. Again, the fact that we have only 1 or 2 reaction bars in these patterns makes them valid continuation prospects. Be certain to understand the price action golden rule prior to proceeding. And always remember, throughout the reaction evolution, the technical analysis signal in the system we are using to determine the universal trigger must remain in effect throughout the reaction pattern into the expected continuation. Again, using the previous Amazon short as an example, we can see that the 6 has clearly remained below the 18, so our sell signal remains in effect. Here's an example of a potential swing high pattern in Taser, which devolves at point B because the crossover buy signal invalidates when the indicator flashes another sell signal. We definitely want to avoid system entries in these types of evolutions. And here's an example of a 2-bar pullback after a point A swing high pattern which evolves a 3rd lower low into point B. Even though the indicator remains in effect, we do not want to trade this type of pattern because 3 or more lower lows are statistically changes in trend. With this in mind, let's learn about the key price action patterns we'll be seeing over and over again as we spot universal triggers. These key patterns are empirically sound and consistently demonstrate probable continuations in price, as opposed to reversals. To be clear, these patterns will immediately follow the universal trigger. They will be productive patterns which suggest continuations. They are frequently recurring. They may be parameters for trading systems. The patterns begin with the swing high or the swing low pattern. These patterns are reactions within the trend flow. This collection you are about to learn represents 90% of the possibilities you will see. And our objective here is first probability. We want to be placing our entry at the point in the trend flow where the most likely outcome is a continuation. And more importantly, we want to eliminate subjectivity and be able to quickly close the analytical window and take action. Some of these patterns recur so frequently and with such significant precision that they may be used as parameters for trading systems. That is, you may only wish to trade triggers which involve certain types of patterns. I've had tremendous success with this tactic. So let me detail these exact patterns now. The first is the inside interval, sometimes called an inside bar. These are intervals which involve a simultaneous lower high and higher low than the previous interval bar. So if our high, as in example A, is the universal trigger, we can see that an inside interval has evolved in this simulated chart graphic. Example B details the inverse pattern on a short signal where the lowest low is a swing low pattern. Note the trend flow objective, impulse, reaction, followed by expected continuation as denoted by the blue arrows. Here's an example of such a long pattern where the swing high interval is noted with the SH above the interval for swing high. See how the bar at point B evolved entirely inside the swing high interval. And here's an example of a short version. See how the interval at point B evolves entirely inside the swing low interval designated by the low marked with SL for swing low. And here's a pattern which involves two consecutive inside intervals following the swing high evolution. These are a bit more uncommon. Next, let's check out 1 and 2 bar pullbacks. The key characteristic of these patterns is that you have either one lower low and one lower high for the long version of the 1 bar pullback, or two consecutive lower lows and lower highs for the 2 bar version of the long. We can see examples here at A and B on the simulated chart graphic. Simply reverse this for shorts. We want to see precisely either one higher low and one higher high for the 1 bar pullback, or two higher lows and two consecutive higher highs for the 2 bar pullback, as seen here in examples C and D on the chart graphics to the right. Let's have a look at some examples to be certain about this pattern. Here's a 1 bar pullback on a long example. Remember the definition. And here's a 1 bar pullback in a short example. Remember, the lows and highs which precede the pullback are always swing high-low universal triggers. And here we see a 2 bar pullback following a swing high trigger. Remember, we must have two specific lower lows and two lower highs to define this pattern. And here we have an example of a 2 bar pullback in a short candidate following a swing low pattern. Again, remember the specific definition of this pattern. Let's continue and learn about patterns which first evolve an inside interval, then a 1 or 2 bar pullback. This is a variation of the inside bar pattern and the pullbacks we just covered. In example A, we have a swing high followed by an inside bar followed by a 1 bar pullback. And we see the inverse of this in example C. And in example B, we see the swing high thrust bar followed by an inside interval and a 2 bar pullback. This is one of my favorite patterns to trade. You will see it over and over again and be amazed at how frequently it places you precisely at the end of the reaction period, just in time for a continuation. We also see the inverse of example B in example D, where we have a swing low universal trigger followed by an inside bar and a 2 bar pullback. Remember, keep the trend flow objective in mind here. The impulse, which culminates in the swing high pattern, followed by a reaction in the form of the patterns we're learning, in which we are going to take positions expecting a continuation of the original impulse. Let's see some examples of actual chart pattern evolutions. Here's a swing high followed by an inside bar and a 2 bar pullback. And here we have a short version of the inside bar followed by a 1 bar reaction after the swing low trigger. As you learn these patterns and begin to recognize them on your own charts, you'll be amazed at how these specific price action anomalies will appear over and over again, and you'll begin to see how probable they really are. Let's proceed, flipping the logic now and considering a pullback first, followed by an inside bar or inside interval. Here in example A, we have a swing high followed by a 1-bar pullback, then an inside bar, with the inverse short shown in example C. And in example B, we have a 2-bar pullback followed by an inside bar evolution, with the short version shown in example D. Let's see how these will look on the charts. Here we have a long version with the swing high followed by a 1-bar pullback and then a clear inside interval. And here is the inverse, a short swing low universal trigger followed by a 1-bar pullback and then an inside bar. Here are some less common evolutions for your consideration. The first is an inside bar followed by a pullback of either 1 or 2 bars, and then another inside interval, as denoted in example A. And as we saw in a previous example, we have 2 consecutive inside intervals, as seen here in example B. Review these patterns as often as you need to in order to hone your pattern recognition skills. Being able to spot these patterns will allow you to build rock-solid samples of very probable trades and get consistent. So let's complete this part of the training by looking at our analytical matrix so far. First, as always, we have the trend flow objective, where we detect impulse expansion and then a reaction consolidation. Next, we perceive the swing high-low universal trigger pattern, which neatly provides the necessary impulse and expected reaction area, after which we can properly analyze the price action and then look for constructive continuation patterns in the form of those we just learned all about. This is really exciting and will help us, with the use of a few more tools you're going to learn, to spot specific low-risk entries which allow us to win 9 out of 10 trades. You should be excited at this point, and the light should really be coming on as you see the strategy unfolding in front of you. As in the last segment, these installments are crucial to being able to implement the system, so please review any material up to this point which may not be entirely clear prior to proceeding. It is really imperative that you have a firm grasp of these critical fundamentals. So when you're ready to go, I'll see you in the next segment.